We have looked at the accounting standard setting in the US. Now let's look at the underlying foundation for US accounting standard. So the underlying foundation for US GAAP is called FASB Conceptual Framework. You can also view it as an accounting constitution. Specifically, FASB's conceptual framework identifies the purpose of financial reporting. So what is the purpose of financial reporting? It is identified in FASB's conceptual framework. It also provides guidance on identifying the boundaries of financial reporting. So what is the boundaries of financial reporting? Selecting the transactions as an event circumstance to be represented. So what kind of transactions should be reported, how they should be recognized and measured, and how to summarize and report. It is disseminated through statement of financial accounting concept, or it is called SFAC. So you can access the SFAC through the codification website that we just mentioned. There are several major components of the conceptual framework. We have the objective of, so one of the conceptual framework is defining the objective of financial reporting. It is defining SFAC number 8. So again, SFAC stands for Statement of Financial Accounting Concepts. And also it includes the elements. It is in SFAC number 6. Quantitative characteristics. That's in SFAC number 8. Recognition, measurement, and disclosure concepts. That's in SFAC number 5 and SFAC number 7. And constraints, that's in SFAC number 8. So let's look at each of those components in detail. First of all, the objective of financial reporting. So what is the objective of financial reporting? And FASB's conceptual framework gives you the definition here. So the objective of financial reporting is to provide financial information that is useful to capital providers. So the keyword here is useful. Then what is useful? What types of information are more likely to be most useful for capital providers? So here, FASB gives you two characteristics that is viewed as representing useful information. The first one is relevance. The second one is faithfully representation. So in order for a piece of information to be useful for decision makers, it needs to be both relevant and it needs to be faithfully representative. Let me give you a brief example here. So supposedly I ask you a question, what did you eat for breakfast this morning? And if you answer me, oh, the weather is very nice this morning. So do you think that answer is useful for me? No, the answer, it is not useful for me at all. Because why? Because it didn't answer my question. It is not relevant to the question being asked. So relevance is very important for a piece of information to be useful. Then, so the same example, suppose if I ask you, what did you eat for breakfast this morning? And if you answer me, oh, I ate a hamburger this morning, but in fact, you didn't eat a hamburger, you ate, for example, an omelet this morning. So is it a useful information for me? It is not. Why it is not? Because it's not true. So that can even be misleading for me. So in order for a piece of information to be useful, it needs to be both relevant and faithfully representative. And then if we ask further, then what kind of information is more likely to be relevant and what kind of information is more likely to be faithfully representative? Then FASB conceptual framework give you another 3 characteristics that can be viewed as relevant. So first of all, the piece of information needs to have predictive value in the sense that it can help decision makers to predict what will happen in the future. It needs to have confirmatory value, so it can confirm whether your previous judgment was true, was good or not. It needs to be have materiality, so which means that, for example, for a firm which has 1 billion in revenue every year, does $10 difference in its accounting numbers relevant or not for investors? So obvious not, right? So $10, why is it not relevant? Because it is not material. So in order for a piece of information to be relevant, it would be nice if it has predictive value, it has confirmatory value, and it is material. And then looking at faithfully representation. So what kind of information is faithfully representative? It needs to be it needs to have completeness, complete neutrality. So means it is neutral, free from error. So those are the key characteristics of useful information. And also, we have 4 enhancing characteristics: comparability, verifiability, timeliness, and understandability. So comparability is basically means that it is both across firms and it is over time. So if it is over time, it is called consistency. For example, for a firm, you cannot do your accounting one way last year and another way this year. So those 2 accounting numbers, the way the firm is doing accounting should be pretty stable over years. If the firm is going to change the way it is doing its accounting, so we're going to talk about it later, but there are different ways we need to do to address it. And verifiability, so it needs to be verifiable. Timeliness, so supposedly, if you are an investor and if I'm giving you the financial information of a firm from 3 years ago, is it a useful information to you? No, it's not. Why it is not? Because it is not timely information. So timeliness is also very important. Understandability. So if you cannot understand the financial information that is provided to you, it is not useful for you neither. So all of those characteristics are very important for a piece of information to be useful for decision makers. And also we have a constraint here, cost-effective constraint. So the benefit should exceed cost, meaning that to provide financial information, it is very, very costly for firms. Firms cannot go all the way. So firms need to take into the constraint of cost when they provide those financial accounting information. Yeah, so that is the cost effectiveness constraint. And then here's an explanation of qualitative characteristics, as we just mentioned, but so let's go over it again here. So relevance. So we first have relevance and faithful representation. Relevance, capable of making a difference in information users' decision. It should be relevant to you. And the numbers descriptions match what really exists or happened. So that is faithful representation. It should be what really happened. Otherwise, it is misleading. And then for relevance, what is relevant information? So it needs to have predictive value, confirmatory value, and it needs to be material. Predictive value help users predict future outcome. So it should help information user to predict the future. Confirmatory value help user confirm or change prior assessment. So the user already have an assessment, for example, of the firm, and the new financial accounting information should help the user either to confirm or change their prior assessment. And materiality, so omitting or misstating it could affect users' decision. So it should be material enough for information user. And for faithful representation, we have it needs to be complete, neutral, and free from error. With regard to complete, so which means it should include all of the information that is needed. Neutrality, so which means that it should not be biased to one interest group versus the other. Free from error, which means it should be accurate. And then we have 4 additional ones. So comparability. Similar items are treated the same way and different items are treated differently. So which basically means that different firms should apply the same accounting principle so that their financial information are comparable. And one firm should try to apply the same one over time so that its accounting treatment is consistent. Yeah, and so those comparability consistency, that is, you can view them as 1 in each time period. Verifiability, oh, sorry, so it is here. Verifiability, so different measures should reach consensus about whether it is representative faithfully. It should be verifiable from different ones. And timeliness, available to decision makers in time to be capable of influencing their decisions. It should be timely. So if the information is too old, it is probably not useful for me because it is not timely. Understandability, so the information user should be able to understand it. So those are the explanation of different characteristics. And then let's look at exercise. So if you go on island, you should see a handout. And please take 5 minutes. Try to finish the first question on this handout. You can pause your video for now. So the first question here is to pair the phrase below with a quantitative characteristic of financial reporting information. What is the first one? Information is useful in predicting the future. That is predictive value. The second one, pertinent to decision at hand. Yeah, that is relevance. Information is available prior to the decision. Timeliness. Information confirms expectation. Confirmatory value. Users understand the information in the context of the decision being made. That is understandability. Agreement between a measure and phenomenon it purports to represent. That's faithful representation. Concerns the relative size of an item and its effect on decisions. Materiality. Important for making inter-firm comparisons. Comparability. Implies consensus among different measures. Verifiability.